If you're a trader, you absolutely know the feeling. You're staring at a chart, price is bouncing around, and you're just wondering, should I buy, should I sell? It feels like you're just guessing. Well, in this explainer, we're going to break down a super clear step-by-step checklist to find your daily trading bias. It's all about moving from that gambling feeling to a structured, professional approach. And let's just start with this, because the source material for this explainer puts it so bluntly. If you can't boil down your bias into one simple sentence, you don't actually have one. You're just rolling the dice. And we all know that's a very, very quick way to an empty trading account. And this really gets to the heart of the problem for so many of us, right? When you don't have a daily bias, you end up taking random trades. You get chopped to pieces in the middle of a range, you get frustrated, and it honestly feels like the market has a personal vendetta against you. It's this vicious cycle of pure guesswork. So let's be really clear about the goal here. This isn't about having a crystal ball or predicting the future with 100% certainty. No one can do that. It's about having a repeatable system that tells you where the market is most likely to go and, just as important, tells you the exact point where your idea is proven wrong. This right here requires a huge mindset shift. We have to completely reframe what the word bias even means for a professional trader. It's not about being some market wizard who can see the future. It's about being a really, really good planner. Let's really zero in on this definition. Notice that key phrase, most likely. See, we're dealing in probabilities, not predictions. A bias is just a high probability game plan based on the clues the market is giving you right now. That's it. And this table just illustrates the difference perfectly. The amateur tries to be a fortune teller. They're desperate for certainty. The professional, they accept that anything can happen. They focus on managing their risk and just executing a solid plan over and over again. It's a totally different universe.
Okay, listen up, because this might be the most important slide in this entire explainer. A real bias has to have an invalidation point. It has to have an exit door where you can say, you know what, my analysis was wrong and I'm out. Without that, you're not trading a plan. You're just trading on hope. And hope is not a strategy.
All right, so now that we've got the right mindset locked in, how do we actually build this plan day in and day out? Let's get to the good stuff, the actionable solution, a simple, repeatable 5-step checklist. And here it is. This is the whole roadmap. We start big picture, we find where the money is, we understand the market's current story, pick one logical target, and then, super important, define our escape route. Let's break down each one. Step 1 is all about location, location, location. Forget trying to guess direction out of thin air. First things first, you need to know, are prices expensive or are they cheap right now? Think of it like going to the supermarket. You want to buy stuff when it's on sale, at a discount, and you're looking to sell it when it's expensive or at a premium. Simple as that. Okay, next up, we mark liquidity. Now, don't let the fancy term fool you. Liquidity is just a simple way of saying where the money is. These are areas where a ton of stop-loss orders are probably sitting. The two most obvious places, yesterday's high and low, and any of those really clean, equal highs or lows you can spot on the chart. They're like magnets for price. Step 3 is all about figuring out the market's story. What is it doing right now? Is it pushing forward with the main trend, or is it taking a little breather and pulling back? You always, always want to trade with that immediate flow. If the short-term momentum is down, you sell. If it's up, you buy. You trade what the market is doing, not what you hope it'll do later. Step 4 is so crucial for keeping a clear head. Don't go marking 10 different places the price could go. That just creates confusion. Your bias is about the single, next most likely move. Pick one logical target. Maybe it's a supply zone, maybe it's a pool of liquidity, and stick with it. This stops you from panicking and making bad decisions mid-trade. And we wrap it all up with step 5, the line in the sand. Before you even think about clicking that button, you have to be able to finish this sentence. My bearish bias is wrong if, and then you name the price level. This single habit is what separates a professional plan from just amateur gambling. Okay, so now that we have the system, it's just as important to know what can totally wreck it. Let's take a look at the most common mistakes that can derail this entire process and send you right back to square one. Let's run through these real quick. First, trying to find your main daily bias on a 5-minute chart? No way. It's a recipe for disaster. It's just noise. Second, trading on a feeling? That's not a strategy. That's a trip to the casino. Third, getting stuck in that messy mid-range chop is a great way to lose money. And the last two are absolute account killers. changing your mind after every single candlestick, and then, after doing all this work, not even trusting your own analysis. So the big question is, how do you build that unshakable trust, that conviction? Well, I'll tell you, it doesn't come from watching more videos or reading motivational quotes. It comes from one place and one place only. The source material throws down a challenge. For the next 30 days, commit to this exact checklist. No exceptions, don't deviate, and most importantly, track the outcome of every single trade you take. Ask yourself after each one, was my bias right or wrong, and why? Because this is the magic loop that creates profitable traders. Consistent action builds real competence in the system. That competence builds genuine confidence in your skills. And that confidence builds the rock-solid conviction you need to pull the trigger without hesitating or second-guessing yourself. And this, right here, is the ultimate takeaway. This explainer is great, but the real teacher is your own trading journal, your own data. That's what will show you what works for you, what doesn't, and where your real edge is. Reviewing your own trades, that's the masterclass. So we're going to end with this question. You now have a clear 5-step plan to take the guesswork out of your trading. The information is right here. The only thing left to ask is a question of discipline. Will you commit to the process? And will you trust the plan that you build for yourself?